If you're running a small business in Australia and most of your income comes from your own skills, personal services income could change how the ATO taxes you. And if you don't know the PSI rules, you might be in for a nasty shock. Here's the thing, a lot of tradies, consultants, IT contractors, and professionals assume that if they have a company or trust, they can just split income or claim all the usual business deductions. But personal services income rules exist specifically to stop people from doing that. And it comes into play when the income is really generated by your personal effort or expertise. In the next few minutes, I'll show you exactly what personal services income is, how the ATO decides if the rules apply, and the simple tests that determine if you are caught by these rules. And later I'll show you a really common situation where a business owner thought they were structured correctly, but the PSI rules completely changed their tax outcome. So first, what is personal services income? According to the ATO, personal services income is income that mainly comes from your personal effort, skills, or expertise, rather than from selling products or using business assets. Think about a carpenter hired personally for labor, an IT contractor hired for their expert, a consultant providing expert business advice to their client, an engineer billing for their knowledge. If the income mainly comes from you, the ATO may classify it as personal services income. But here's where it gets interesting. Just because you earn PSI doesn't automatically mean that these strict rules apply. To work out if the PSI rules affect you, the ATO uses 4 tests. Pass one of those tests and you're generally considered a personal services business, meaning the PSI restrictions usually don't apply. 1. The results test. You're paid for producing a result, provide your own tools, and fix mistakes at your own cost. 2. The unrelated clients test. You work for multiple unrelated clients and gain work through advertising or offers to the public. 3. The employment test. You hire others to do at least 20% of the work. 4. The business premises test. You operate from business premises separate from your home and clients. Pass one of those tests and you're generally considered a personal services business. Now stick around till the end because PSBs have their own additional rules. But here's the problem I see all the time. For example, let's say a client comes to us, maybe an IT contractor. They've set up a company thinking they can split income with their spouse, but nearly all their income comes from one client, and they personally do the work and they charge for their time. So the PSI rules apply, which means the income is attributed back to them personally, and a lot of deductions disappear. But they thought the company structure solved it, so they ended up with a tax bill they didn't expect. And if you qualify as a PSB, the ATO has issued guidance on your tax treatment. If you do not employ team members with the same qualifications as yourself, you really need to look at the ATO's guidance in PCG 2025/5. Just quickly, this video is general advice only. Your situation could be very different, so it's always worth getting proper advice before making decisions. If you're one of our clients, we will review this as part of your complimentary tax time meeting, as we do every year. Thanks for watching, and I'll see you next time.